Wow. All right, we're live. Let me just quickly. Who the hell is messaging me so much? Boom, 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 boom. Okay. Let me know if you guys can hear me, and then voice-wise, yeah, you are first, sir. Can you hear me, Don? Like, am I in terms of okay, cool. So yeah, so quite a bit to talk about today, of course, given the market conditions and whatnot. Let me just put my phone on charge because I am gonna be heading out later, and every time I do these live sessions I always forget to charge my phone, and then you guys message me and then I just can't respond because my phone ends up dying. So welcome everybody. So let's talk about Bitcoin first. Of course, on Bitcoin, you guys can see that we did have a very nice retest of this midterm support level down to around 60.7 into Asia hours, 60,700. Now, last night I mentioned to you guys, right? So we got this short pretty much quite a lot of shorts actually all the way towards the downside. But last night I mentioned to you guys that it's not a bad idea to lock in those profits from your shorts. And the reason why I gave you guys that heads up was because of the fact I have traded Fed news a lot in my lifetime. And the problem with Fed news is, of course, it's very dependent, right? You're 50-50 on whether the market cycle is going to be bullish. So the reason why it's not 33.33, because you're probably thinking, well, there's three options: either it's bearish, it's bullish, or it's neutral. So for today's example, of course, the rates were unchanged. It was neutral outspec. So you can see the market in turn took that as a bullish confirmation, and now we have a V-shaped recovery happening on Bitcoin. The reason why we pretty much ended up looking to close our shorting positions this week was because of the fact that this was very news dependent. We didn't necessarily want to hold out a position. Of course, if the news was bearish, then whoop-de-doo, right? You guys were probably going to bank a ton of money. But the problem with that is, like I said, it's that 50-50 idea, and I don't trade on chance. We're better off just trading on what we know. And right now, of course, you can see on the 4-hour time frame, Bitcoin has broken above these exponential moving averages with a strong bullish engulfing, and now we have a continuation trade. So for all the folks that, of course, shorted on this way towards the downside and didn't end up locking in profits, now they are underwater. And this is why I tell you guys that we are in a scalp market. We are in scalp traders on the 4-hour, and we are looking for those scalps in and out until the trend is changed. You can see on Ethereum, we were pretty much continuing to short on these exponential moving averages all the way towards the downside. This was an extremely profitable trade. We started shorting right here where my circle is at 3,700 to the lows of 3,050 last night. Of course, our first target of 3,200 was hit perfectly. Second target, which remains to be at 2,800. And before we jump ahead and assume that it won't be hit, there are a few things that we have to understand. Now, looking at the 4-hour time frame, you can see in terms of exponential moving averages, we are trading above them. We have a very nice breakout opportunity, but on the daily time frame, guys, nothing really has changed for Ethereum. You can see that we are pretty much in the same sort of price mode. We are still trading below our exponential moving averages on the daily. Were we looking for some sort of bounce opportunity? Yes, we were. We needed to see some sort of bounce opportunity in the market, given how large of a corrective move this was from 40.28 down to 3,000. That's about a $1,000 decrease in about 2 days. So it's not rocket science to know that we are looking for a bounce, but does that mean you all of a sudden start looking for swing long positions? This is the next leg up and yada, yada, yada. Well, we have to look at it from a daily perspective. The first thing we have to look for a trend change on daily is trading above the exponential moving averages. You can see that as of right now, we are still testing them as resistance. We most likely will see a pump into 3,500 later tonight, which again is Asia hours. We tend to pump during Asia hours and things become extremely volatile. So most likely we will see a retest opportunity into the $3,500 range. Now, once that level is hit, that is going to be the crucial point that everyone needs to pay attention to. If we get a trend break above that level and retest it as support, that's the confirmation for the next leg, then this would be considered the local bottom. If, of course, the market ends up rejecting that level, then I would heavily focus on 2800. That would show the fact that there are buyers eager at that zone, as well as the fact that 2800 actually has quite a bit of confluence on the chart. You can see we have multiple retests in that zone. EMAs were being used as support. You get the point. So in terms of Bitcoin right now, you will notice that we are pretty much in the same sort of category. We are trading in between our exponential moving averages. We just hit the 9 exponential moving average in terms of resistance. We still have about 3.5 hours before this candlestick closes, so it's still a little too early to say whether or not we are looking for that continuation. With V-shaped recoveries, they're very easy to trade. So a V-shaped recovery would look something like this. You can see right here, we had a very nice retest. This would be the area of opportunity I would take along. I would wait until the exponential moving average is broken. That's my first entry of my V-shaped recovery. My exit would probably be either on this candle right here or it would be on this wick. Most you guys know I trade wicks, so it'd be around 68,000 where I would be exiting. Right now, would I be entering a trade in terms of a long opportunity? Not necessarily. It's, of course, extremely risky now. We've already had a pump about $7,000. And this is why, I teach you guys this and I taught you guys this. So just from a bear market perspective, you guys know, for the OGs in this channel, we have been shorting Bitcoin for a very long time. Very, very long time. We shorted, we profited, we were banking all the way towards the downside. If you guys notice that my strategy, or rather what I teach you guys, changed a little bit. I stopped talking about, hey guys, we're going to be entering on this support and we're going to be riding it to blank support, or we're going to be swinging it to blank support. Instead, now I talk a lot more about scalping, and the reason why is because of volatility. The market has completely changed from previously on Bitcoin when we were trading at, for example, all the way down here at 47,000, 40,000. The market completely changed in terms of direction, right? So before, we would see maybe a $1,000 move and everyone would be like, oh my God, you see Bitcoin today? So now we're starting to see $7,000, $8,000, $9,000 moves on, within a day. And it's like no one bats an eye. Like, you guys look at the ticker. It's $5,460 in terms of change in the past day. That is a huge difference in terms of how people were used to trading versus how trading is right now. And that's a good thing. The reason for that is because you don't necessarily want to swing these positions. You are much better just looking for those scalping opportunities in and out of the market, because the volatility is in your favor. You already know that if you are right in terms of your moveset, the candlesticks that are going to be formed are going to be extremely large compared to how they were before. So again, another example of that, you can see right here on Bitcoin, we had pretty much in one 4-hour candlestick from 66 down to 59 in one candlestick. Do you necessarily need to use 20x leverage, 10x leverage, 15x leverage on these moves? No, not at all. You can easily ride these moves on a 5x, 3x move. So in terms of just educational purposes, I talked about this. So you can see the wick is most likely going to be the first area where we start looking to take profits. Just from an education standpoint, I'm just going to leave this chart up for you guys so you can see why wicks are so damn important. Once we end up testing that wick, you're going to see profit taking happening across the board, and then you're going to see that continuation. That level is going to be acting as a stronger magnet on Bitcoin. What does that mean for altcoins in general? Well, just like I told you guys, let's talk about V-shaped moves, okay? Well, there's 57 of you, so I just want to make sure that everyone, at least before you guys leave and move on to your next favorite YouTuber, you guys get something out of this. So right now on Ethereum, right, just from Ethereum standpoint, you can see we have a very nice V-shaped move, right? So the same V-shaped move we saw on Bitcoin, the same exact move shit. The only difference is Bitcoin broke above its exponential moving average. But hey, look at Ethereum. Where is Ethereum on the chart right now? It is not at that level, the same level. So what would that mean? Well, that would be a very nice lagging trade. You just take a long position on Ethereum. You know that as Bitcoin rallies into that daily resistance or into the 68K, Ethereum sooner or later is going to play catch up. And when that catch up happens, it's a very nice V-shaped moveset. The same V-shaped moveset that you can see on Bitcoin is playing out. The same exact moveset is playing exactly out the same way. Ethereum is going to catch up. And now you can see, guys, guys. Look, this is live, right? Now, all of a sudden, Ethereum just jumped up $16. Like, look at Ethereum go now, right? So it's the same thing. When you start seeing Bitcoin, you're like, oh my God, man, I missed the move. You didn't miss shit. You realistically didn't miss shit. You can easily go to any of your altcoins and look for the same setups. Ethereum has an identical V-shaped formation right now, and your exit would be at 35.45. If you're entering on even low leverage, that's a huge move set for you to be profiting, right? Given the volatility and everything, of course, that's fine. But I'm just giving you guys an educational standpoint. You want to take the trade, go ahead. It doesn't matter to me, because in terms of education purpose, you can see my point was proven, right? So we're about $100 off to where I said we'll most likely start taking profits in terms of, of these traders right now. And of course, not only that, but you can notice in terms of an educational standpoint, this V-shaped formation is going to respect this wick. It's going to respect this wick to the dollar, and then you'll start seeing major profit taking. These are just things that I have learned throughout my years of trading, and I try to teach you guys. Of course, some people feel that as soon as they enter the market, oh, the trade's negative, the trade's going against me, Pingu, I don't know what I'm doing wrong. You're not doing anything wrong. The only problem is you're hesitating, and hesitation is the biggest thing in this market, because if you can see with Bitcoin, if Bitcoin's rallying, why are you shorting Ethereum? Why would you short the altcoins? It doesn't make sense, right? It's the same way. So here's another example of another trade, right? So you can see the same exact setup on Cardano right now is the same trade. It's the exact same trade. It's a V shape. And what we're looking for is the same wick opportunity. You can do this across the board. You can take these long positions across the board, but please understand that there is going to be market volatility. We trade on the 4-hour time frame. The 4 hours are going to become extremely dangerous. And of course, if you enter, let's say, at the top of the wick, so we're getting near the wick, right? So we're what, like $80 off right there? You entered exactly on the wick for $80. Like, think about that yourselves, right? From a risk standpoint, are you stupid, right? Like, I genuinely mean that. Like, are you dumb? Like, we're talking about the wick standpoint at 68, and the market just hit 67.8, and now you're fighting over $150 when this whole move that happened from down here at 65, from an exponential moving average retest to a V shape, you could have entered here. You could have entered anywhere there. Then that's what I mean by risk to reward, right? It's the same thing. So, oh, I missed a trade. You have other opportunities here. I showed you guys Cardano. I can probably click on like 40 different altcoin charts, and they're probably all going to look the same. Every single chart, I mean, apart from Memecoins, don't get me wrong, but most coins look identical because why? They follow Ethereum, they follow Bitcoin. You can see in terms of Doge, right? So Doge, we had our first target at 0.124. The amount of hate I received from the fact that I said, hey, up here at 0.17, I said we're going to hit 0.124 as a first target. Second target in terms of a wick, if we are looking for that bearish news today, would be 0.11. The amount of hate I received in that video was saying, oh, this guy is always bearish. This guy's an idiot. He doesn't know what he's talking about. And you can see that level ended up playing out absolutely perfectly, right? And the reason why is because we put our emotions away from the side. And 0.124, the bulls ended up holding, but everything was dependent on today's news. We shorted this whole way. You guys know from Telegram, we shorted, we profited the whole way down. We locked in profits yesterday. Why did we lock in profits? Well, because not from a technical standpoint, but from a fundamental standpoint, we had news today. We had news today, and we knew the fact that if news was bullish or anything, the market was correcting, your trading plan would have changed. It's not the technical analysis that was wrong. It's just noise in the market, and sometimes this happens. You have to understand that this is a normal part of trading. What you can do instead from a psychological standpoint is have a rule. So for example, my rule, what I teach you guys, and I know a lot of you guys don't listen to me because for whatever reason, you guys think that, you can do your own thing, and that's fine. I pushed for that. You should do your own thing. But my rule for trading on Fed news for those weeks is Monday. So usually it's Wednesdays is when we see, like today, we usually see Wednesdays for Fed or any speech or any bullshit that happens to the market. Mondays, I will trade cautiously. So what I mean by that is market open, I will take some trades here and there, but I won't take anything crazy in terms of a swing position. The reason why I don't is because I don't necessarily want to get caught out on the following day, which of course is Tuesday. Now, Tuesday, you start seeing a little bit of volatility, right? Because everyone's expecting tomorrow, people are setting up their trading positions, and then Tuesday night, Asia hours is when things get absolutely crazy. So what I mean by that is you can see on Ethereum, nuke, literally a nuke happened in the 4-hour candlesticks, and immediately after, the next morning, we were chopping, right? We were chopping both ways. News came out, then the market decided whether it wanted to push up or down. That's pretty much why I don't necessarily trade. Tuesday night, I lock in my trades. I don't care if I'm down a little bit. I will lock in those profits because it's better than me getting liquidated the next day. I can make that money back a lot easier as long as I have capital to work with in the market. If I don't have capital all of a sudden because I got liquidated, you're going to sit there and you're going to be like, damn, man, that was such an easy trade. I should have taken that. Oh, wait, you don't have money to take that, right? And that's what I'm saying is this is an educational point for a lot of you guys because I see these mistakes from a beginner standpoint. A lot of beginners make this mistake where they will sit there and think that they're the best fucking traders ever. And they'll be like, you know what? I'm gonna trade the news, man. And I have seen it. I have seen it first come, first serve from you guys, some of you guys, where the news will come out and it'll be neutral and you'll be like, Pingu, I just entered a 100x long position. Within 5 seconds, never mind, liquidated. And it's funny to me because it's like a learning point, but that's what I'm trying to say to you guys. You can avoid that. This is just human psychology. The greed aspect is always going to be there, but you need to understand that you have a reason to enter a trade. Now, for example, like I said, on Ethereum or Bitcoin, just as an example, the whole bullshit day is done, right? All the choppiness, whatever, the news article is done. Powell said whatever, it's neutral rates. We're chilling. Can we trade now? Yeah, you can take some trades, right? You can enter a long on Bitcoin. Like I said, same thing, right? In terms of the wick. You can take a long on Ethereum in terms of the wick. It's playing out exactly the same way. And that's what I mean is you avoided all the unnecessary stress last night. You did not trade the wicks. You were not, panicking, closing, whatever. Now you're chilling. You can just enter, scalp the range like we're scalping, just scalp along, in and out of the market, take your profits, and you're done. You're calling it a day. Why? Because tonight, when Asia wakes up again, that article or whatever is going to be in that face, and you'll start seeing larger move sets. And then you can decide, hey, do I want to trade tonight or not? My educational standpoint for a lot of you guys is this, okay? Just like, I know this is turning into a lot more educational, but because there's so many of you on here, I just want to make sure that everyone gets something out of this. My rule of thumb in terms of trading, and this is a big thing to learn, and again, I have been doing this for 7 years, and this is something that for me, I struggle with for years and years and years and years. And I want you guys to understand this. So I'll move it all the way up here so everyone can see, okay? We're going with the blank shit. So as a trader, I don't care if you have a trading journal, great, do whatever you want. Doesn't matter to me. I personally never use a trading journal. I'm sure I could have been a little bit of a better in terms of learning curve. I probably would have learned faster if I did have a trading journal. That's fine. Don't care. I'm talking about the over trading aspect, right? So over trading is the worst you can do as a trader in crypto. You can do that in Forex, whatever. You can do that in the stock market, whatever. Regardless, in crypto, you make a mistake, you are getting wrecked because of how volatile crypto is lately. So over trading, what I usually recommend to most beginners or someone that's getting into trading or whatever, and this does not apply to a spot position only, okay? Or sorry, leverage position only. Don't take it as, oh, he's only talking about leverage, this doesn't apply to me. This applies to you guys too that end up holding your positions long term, because this is a big thing, and I will tell you guys why. Number one, in terms of a leverage position, the rule is you take 1 to 2 trades a day. And again, don't think like, oh my god, there's so many trades. No. That is good setups in terms of scalping on the 4-hour time frame. There are probably 30 trades available every day, almost every single day in crypto. The beauty of crypto is how volatile it is. There are so many trades available every single day. The only difference is you need to decide which trade is going to be the most profitable trade. And I've explained this to you guys on how to spot that, but 1 to 2 trades a day. I don't care if you won 10 G's, right? You're up 10, 20, 30, 40 grand. You feel untouchable. You go out for a walk. I don't care if you're down 10, 20, 30, 40 grand, go out for a walk. And the reason why I say that is because what you're going to do is when you feel untouchable, you're going to take larger risks in an uptrend market. You're going to feel like this is up only, I'm going to keep going, and then market, boom, flushes you out. There goes all your profits for the week. You're pissed off. You could have thought, oh, I could have bought X, I could have bought X, I could have bought X. Now, you're someone that lost a lot of money, right? So you're someone that market's going up, you entered a short, you're getting absolutely liquidated, you're getting wrecked, you're pissed off, you're down 20, 30, 50 grand. And again, I'm just giving numbers out. It can be any amount. At that point, you're going to want to think, I got to make this back. And you feel like you have to make it back within the next day or the next 5 minutes of your trading career. Then you'll continue entering trades, wrong, and then you'll be like, I don't know what I'm doing, man. The market's against me. I really don't know what's going on. It's not that. It's not that the market is against you. It's just your psychological in terms of emotions. And I'm not perfect. I've done it for a very long time myself. I have made the same exact mistakes. So sometimes when you guys message me and you're saying like, oh, Pingu, I'm up 30 grand a day, or I'm up this, you guys send me your positions like 6,000% off charts that I sent you guys, and I'm like, what? The first thing I always tell you is take your profits. That's the first thing that's out of my mouth. Take your profits. I don't care what you think the chart is. I don't care what I say. For example, and I'll give you guys an example of this. At 40.28, I said this is going to be a reversal standpoint. Someone in the chat ended up taking a short position on Ethereum, and I think yesterday or 2 days ago, they messaged me. They're up like 10x their account. 10x their account. And I said, you know, first target is going to be 3,200. Second target is going to be 2,800. He said, Pingu, I'm going to let this ride until it hits 2,800. Thank you so much. This is life-changing. And I said, take your profits. And he's like, why? And my rule is the same thing. What I tell you guys is what I preach is the same way, is because the market can turn at any point and it doesn't owe you shit. The market does not owe you anything. So you have to understand that when the market does end up reversing, you're gonna wish you took those profits. So that's my point across to you guys, is when it comes down to over trading, please be cautious. I try my best in the Telegram to tell you guys, hey, locking in these profits. Hey, I'm not trading today. And that's why, is because the market to me is volatile. I would much rather not have you guys go absolutely crazy in terms of your trades and flip out. You know what I mean? Like, I don't want it to be like, oh, you know, yada, 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 Pingu, guess what? I just made blank, blank, blank. Okay, I don't care. I don't care how much money you made. I just want you guys to have good long-term perspectives on where the market can possibly go, right? So that's my teaching aspect for you guys today. In terms of everything else though, like let's just talk about markets now. I think I got my point across to you guys. What's next for crypto? What's next for Bitcoin? Is this the next leg up? So I talked about the daily time frame, but what we have to understand, after this wick ends up playing out at 68,000, and if you notice where the wick is, right? So as of right now, we're fighting for these exponential. Sorry, let me delete my lines here because there's so much drawings happening. So as of right now, we're fighting for these exponential moving averages. This is going to be a very volatile zone for crypto in general. And the reason for that is because if the bulls can manage to break above those exponential moving averages, then that is a confirmation for a lot of people that this is the next leg opportunity into the 80K region. If the bulls fail, if they fail within the next 3 hours, they fail to break above these exponential moving averages, then ladies and gentlemen, this is again news-based. Tomorrow we most likely will see another leg towards the downside. We have to be very cautious here right now because this is a crucial zone. What do I think about a crucial zone? Well, same thing. Why are you trading? Why do you want to trade a crucial zone when you know the market conditions are not in your favor right now, right? We just had news. We have volatility. What is the point for you to take this trade? There isn't a point for you to take this trade. And I'll show you guys a little secret, right? So for those of you in Telegram, you know this. And again, there's like 80 of you in this call. Cool. Like, the Telegram is free. Okay. Everything I do here is free. For those of you new to this channel, watching the first time, I'm not selling a course. I'm not doing shit. Everything I do here is free. So my point and the goal is I just want to make sure that you have someone holding your hand in this bull run. I just want to make sure that no one ends up losing money that they don't need to off a stupid ass mistake. So when do we know that we are in an uptrend market? Of course, we have to pay attention to our daily time frame. Step number 1, look at the exponential moving averages. If we are consolidating, so something like this in between, that is a no trade zone from a leverage perspective, from a spot possession perspective, because we don't know what the market's going to do. The minute we end up breaking above our exponential moving averages, right here, boom, we ended up breaking above our exponential moving averages. As long as we hold above the EMAs on a daily time frame, we are only looking for long opportunities. You guys know this from Ethereum because we traded this thing insane. We called this absolutely perfectly. We were taking longs the whole way towards the upside. Not once did I say in my Telegram chat, guys, short, guys, swing short. I saw people on YouTube saying, short, guys, this is it, this is over, yada, yada, yada. There are levels to when you can short. Yes, there are levels when you can short. And the levels, of course, would be the first time, just looking at previous price analysis, was at 40.28. That's what I mentioned to you guys in those videos on YouTube that said, hey guys, 40.28 is probably going to be the first level we're going to see a corrective move. And that is exactly what happened. At 40.28, the market nuked. it said see ya, and we collapsed on that level, right? Then all of a sudden everyone's super bearish. All the gurus came out at 3,000 Ethereum to $500, and it's like, dude, are you dumb? Like, are you just not understanding how this works? As long as the exponential moving averages were there, we were in a bullish trend. Now they flipped to a bearish, like, corrective move, right? We are not in a bear market all of a sudden we're going to 20K. That's not what I'm saying. We are in a corrective move. These corrective moves happen. I can give you a perfect example of this. Looking at the previous bull run, you can see, look at this. So I'll give you two examples rather. The first example was the initial run up we had, right? So on Ethereum, the initial all-time high breakout, whatever. When that initial run happened, we had a beautiful corrective move at 40.28. Ethereum dropped from 40.28 down to 1,800, and then we saw a continuation of a next leg. Does that mean it's going to happen again and yada dear doom? No, that's not what I'm saying, right? It's just the previous price analysis should just give you an indicator or an idea of what could happen at the worst case scenario. Yes, the chart almost looks identical. If I'm looking at Ethereum right now, it's the same exact chart almost from the previous drop. This is probably most likely where we are as of today. We're probably going to get the exponential moving averages retest on the daily. Most likely we will see a rejection point. Tomorrow, doom and gloom, we're going to see a massive candle. Again, it's all perspective, right? Someone else might see this as a buying opportunity, whatever. I don't care. I just trade the charts, right? So looking at it from that perspective, you can see that Ethereum dropped from 40.28 down to 1,800. Number two example was the same thing over here. We saw the same idea. We had a huge run. Probably this is identical to what the run was, from 1,800 to 40.28. Then we had a bearish engulfing. We dropped down to 2,700. And then we had the next leg towards the upside. Did all of a sudden, was this a confirmation that, oh, we're in a bear market? Oh, this is it? It's over? No, this was just a corrective move. After jumping so high, we had to have some sort of corrective move before continuation. That's where I think we are in as of right now. I think we are in the corrective stage of this run where a lot of retail, a lot of traders got super greedy. And again, these are easy things to spot. And now we expected some sort of rejection. Now we are seeing that, and we have to wait for the exponential moving averages to decide. Is today going to be the day where we break above and retest as support, and that's the confirmation of a local bottom? Sure, could happen. Personally speaking, I don't think so, because supports are usually magnets in these current market conditions, right? A support level bounce and then a break is a lot more bullish than a random wick break on the midterm chart level that makes no sense. And again, these wicks are buying opportunities for a scalp position. They play out extremely well. It gives you an idea of where the market can possibly go. So just on Ethereum, you guys see that when I mentioned, oh, would I be catching Bitcoin? No, why the hell would I catch Bitcoin, right? So again, just a perfect example of that. Look at Ethereum now, 34.85. Ethereum was a better trade than what Bitcoin was currently trading at. Bitcoin already had its V-shaped correction move pretty much done. Ethereum did not, though. Ethereum was a lagging move, and we could have taken a long for that. And again, if you guys did take the long, you are in profit. Yeah, it's volatile, sure, but again, you are in profit right now. The overall idea is what matters, right? It's not about the little drawdowns you have here and there. I get the question a lot, oh, Pingu, what do you do when you enter a position and immediately in the red? What do you mean? What, like, it's like the same thing, right? It's like, if I'm taking a position, I know I'm going to be in the red. If I'm in the green all of a sudden, then great, magical. But most times, I'm usually in the red as soon as I enter a position. That's, of course, on its own slippage, whatever, yada, yada, yada. But that's how I trade, right? As long as I have a plan, I know in my head that Ethereum is going to head into the V-shaped corrective move on the wick high at 3,500. I got a plan. I'm not going to close the position if it goes down a little bit. I'm not going to panic. I know it's volatile, but then why are you entering? Like, if you know that it's going to be volatile today, then don't take the trade. Like, it's very simple, right? You don't have to take the trade. No one's forcing you to take a specific trade. But that's my point. Anyway, so let me read the chat. I completely ignored you guys for so long. Doge. Remember I'm not moving on anywhere. Watching Pingu, learning right now. Gary USDT. Do you recommend taking a short at the top of the V-shaped formation? Oscar, that's a great question. So in terms of a shorting position, so sometimes traders, what they will do, and you got to be very careful, is what they will do is they'll end up taking a short position on Bitcoin, for example, at 68,000. So this wick high. They'll think that, hey, okay, oh, this is pretty cool, right? So there's some confluence here. I see some wick opportunities here. Yeah. This makes sense. I'll take a short. What happens is you're not taking a short on any sort of major resistance. You can see there's no major resistance in between this level, right? It was just basic price action everywhere. But if you take a short, what happens when Bitcoin ends up ripping? So it breaks above that midterm resistance. Now we're testing 69. You're probably thinking, oh, you know what? It's probably a fake out. I'll end up holding it. It breaks 69. Now it's riding into 70K. Now this is what the chart looks like. This is a trend break. Everything starts pumping. Now you're liquidated. So what's a better shorting position at that point? And I'll give you a perfect example of that. A better shorting position would have been, so here's an example of the trades, the same idea set up in the beginning, right? So the same idea, we take a short and midterm resistance. Should we take it here? Or would it be better to take it on a major resistance? A major resistance, and the way you get confirmation on when to know if it's a legitimate trade, is a candle close. You guys know I like trading candle close positions. Why? There were two beautiful examples of this trade that happened. Bitcoin was testing near all-time highs. Everyone was extremely bullish. We pretty much entered into the break of all-time high. Everyone longed. And then immediately we nuked and wrecked everyone. Same sort of situation happened again. Bitcoin ended up breaking into all-time high. We got a few $100 of a trade. Everyone got super bullish. Boom, candle closed again below the resistance level. So that's two things you could have avoided if you just kept your emotion straight and waited for the 4-hour close. That's it. Very simple. All you had to do was just wait for the 4-hour close. 4-hour close, you saw that it rejected a major resistance point. Boom, short entered. And you got the 4-hour close. You know it's on a major resistance point. You know the fact that, of course, we are in extreme overbought conditions as well. That's 3 reasons of why you should enter a trade. Versus right now, you're looking at it like, okay, RSI is kind of in between, middle. We're seeing a wick here. We don't know exactly where this wick's going to go. We might see a retest up here, but I mean, was the market oversold? Yeah. Looking at the daily, the bulls are fighting for the exponential moving averages. You see what I'm saying? Like, Oscar, like, is it really the smartest decision to take that short right now? Probably not, right? Probably not. You don't necessarily want to trade the chop. But, yeah. Do you recommend... Okay, so Spotlight just arrived. Laughing face. Okay, so any other questions do you guys have? Like anything else you guys want me to talk about real quick? I'm just going to reply to some text messages, but yeah. Yeah, if you guys have any other questions, let me know in the chat. Yeah, I'm surprised. I think that's the most I've ever seen is YouTube. Like, I don't think I've ever seen us break 50, and we had 81 at the top, which is pretty cool. Turbo meme coins on Sol, don't trade those. It's pretty much a free-for-all. You're pretty much on your own for that. Can't help you there, buddy. I don't trade meme coins. The only meme coins I will talk about are the main ones. So once you're on like a perp contract, like Dog with Fat or whatever, I'll talk about it then. But most times I avoid meme coins because I want to protect you guys. I don't necessarily want you guys to be panicking. Rather, I don't want you guys to be liquidated. Let me say it like that. Because meme coins are very dangerous, right? Like, you can enter a meme coin and then it'll be up and up and up. And then boom, rug pull, boom, wreck, boom, whatever. So, like, that's why I don't personally trade meme coins or talk about meme coins on this channel. There are better ways to go about it, unfortunately. But right now, in terms of meme coins, I just, like I said, Solana meme coins have taken a huge storm on YouTube. I've noticed too, a lot of retail's getting in. Some of my friends have been messaging me about Solana meme coins because they all hear the same story, right? Oh, trader turned $200 into $10 million, and everyone wants to be that guy, right? So that's where the gambling aspect comes in. 90% of meme coins go to zero. The few that make it, like I said, it's a long chop sideways emotion. Most people don't end up holding it. There's only a few mental illness patients that I think will genuinely hold a meme coin to billions and billions. And that takes a skill. That's a level of skill. So again, this chat will never be a meme coin chat. There's a lot of meme coin traders out there that you can follow. Me personally, I'd rather just stick to, you know, what we know and what I can teach you guys for the long term, because meme cycles will always happen. Every single bull run, there's going to be a meme cycle. You know, everyone's going to be making money from meme coins. You want to jump in, go ahead, learn. But long term, whether I'm here or not, you're probably going to take this better in terms of education. So yeah. Let's see. Do you ever sell spot positions and then rebuy back in? So Labyrinth, that's a great question. So the same idea, right? So when I talked about it from a leverage perspective, you want to be very cautious and exiting your spot positions based on emotions or based on what the charts are telling you. The amount of times I got the question at 3,500 Pingu, should I sell all my Ethereum and rebuy lower? Listen, you can if you want to. Most times you end up getting wrecked because of the fact that right now, long term, I think all of us understand the area of cycle we are in. We know that this just started and we know how crazy it's about to get. Genuinely how crazy it's about to get. So from that perspective, if you know that long term you're extremely bullish, like you know the market's going to do extremely well long term, is it really worth taking the risk of your spot positions to close? And I'll give you a perfect example of that. And I have a good example because this was a generational wealth trade that I messed up on, right? And I take account for it. So I had dog with hat, again, meme coin, sure. It's still a spot position though. I had dog with hat right here in between this chop zone. So it was just kind of ranging in between this level. I ended up taking my profit. So I ended up selling my coins because I figured it was going to go lower. And instead what happened was the market didn't go lower and we just pretty much, you see what happened after that, right? The market decided, oh, Pingu sold. All right, today's the day. We're going to end up seeing a new all-time high. And it just kept going after that. So then the psychological point, oh, it'll come back. I'll buy again. Nope. Oh, it'll come. Should I buy here? Nope. It's already kind of high, right? Nope. Oh, it's kind of high already. Okay, nope. And it just keeps going. That's what happens to a lot of traders. So what's better is if you, like I said, if you are in a position, if you are in a spot position and you have this coin conviction, you got it at the lows. I can give Doge as an example for a lot of you guys. Maybe at 0.08, you bought Doge, right? And you bought Doge, and now long term, you know that Doge is going to go to $1. That's your psychological thing. You're like, I'm not going to sell until it hits $1. All of a sudden, Doge goes from 8 cents to 21 cents. Now you're up almost triple your portfolio and you're thinking like, long term, I could sell this and I could buy 50% cheaper. This was a fluke, I'll say, right? So this happens right in the market. We will see some corrective move, but most times when a bull run for altcoins happens, there is no pullback. And I genuinely mean that. And I'll give you guys a perfect example of Cardano, right? So Cardano, everyone's hated coin, yada, blah, 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 don't care. Don't care about your feelings on Cardano because Cardano is a perfect example of when an altcoin rally happens, what this market can really do. Cardano was trading for the longest time from 3 cents to 4 cents in between this range. And a lot of traders probably gave up on Cardano, right? Because they were like, screw this, stupid ass coin, not doing anything, pointless. What happened to Cardano after that was when the initial bull run started, you can see this is probably the bull run, the starting of the bull run. Cardano shot up from 3-4 cents to now the highs of 14-15 cents, right? So you can see right here, we did shoot up quite a bit, right, in this price action. So from a generic standpoint, from a psychological standpoint rather, someone who bought in at 3 to 4 cents, now sitting at 13 cents, they're probably thinking the same thing. Yo, what if I sell my coins right now and I'll just rebuy later, right? Wrong. What happened was altcoin season started from that point and Cardano went from 14 cents to the peak of $3. Generational wealth opportunity for a lot of people, and a lot of people ended up selling and failing. So that's why when I talk to you guys, I always talk about the long term. When I say, hey, I'm in this for the long term, I genuinely mean I'm in this for the long term. Meme coins are a little bit different. So Pepe, Bonk, a little bit different of a playing field. Given how volatile there are better opportunities to kind of flip those. But when it comes down to like actual coins, like for example, Beam, Immutable X, like just examples, right? These coins, probably not the best idea to be flipping them. You're probably better to just take it long term and just end up holding it. So I hope that answers your question. May I ask for ETH? You were saying waiting for the next few hours to see what happens, a candle growing. Exactly, yeah. So I'm right now just waiting to see how this candlestick plays out on the daily time frame. I know from a daily perspective, these exponential moving averages are most likely going to act as a magnet, right? Not only that, but on the 4-hour time frame, we also have a very nice V-shaped move looking to play out exactly like Bitcoin. So from those two perspectives, you can take a long position. You have to understand the market's volatile. So if you do take the long position, it's going to be volatile, right? Like I think I've switched between the tabs like 20 times. At one point it's 34.90, the next point is 34.50, next point is 34.70. So yeah, the market's moving quite a bit right now. But I would personally be waiting from a long-term perspective, or someone who wants to swing trade or whatever. I'm waiting for the daily exponential moving averages to play out. Once those daily exponential moving averages play out, we break above, we long. If we end up rejecting, we are not trading that. We're just going to see how the market plays. If the EMAs flip on the 4-hour back to resistance, we are back to shorting, just shorting back to 2,800. That's most likely the play then, where this would have just been noise, little market recovery, and then boom, something like this would be probably the case scenario we're looking at. This is all dependent, of course, on the daily. So everything depends on the daily. That's pretty much how I trade. That's how I teach you guys. Okay, cool. Everyone understand? So yeah. Let me just read messages. Let's see. Okay, I think we're good. Something about Doge. I'll make a video on Doge for you. I don't want to talk too much on Doge because again, like I'm gonna make a video on Doge, I promise, and I can't wait for that video because I already know. Haha, it jumped today 15%, Pingu. We were right. And then the next day, like, do you guys remember that comment? I forget what his name was, but he was like, this guy's evil. Every time he talks about Doge, it goes down. Someone tell him to stop making videos on Doge. It made me laugh because that's really how like people think like. Bro, get out of here. Okay, fine. People think that, you know, I'm some sort of market maker or something, or like I have that much size where I can move Doge myself. When I say Doge goes up, everyone goes up. Like, no, guys. First of all, I'm a small ass YouTuber, and secondly, like my size for Doge is not size at all. There's players out there with hundreds of billions of dollars that can make Doge move when it wants to move, right? So again, I just give you guys a realistic perspective of where you can possibly look to buy and sell Doge. And so far, it's played out perfectly, right? We've had pretty good luck with that, and I'll continue doing that. You know, emotions aside, I can sit here and tell you, oh, Doge is $3, Doge going to $5, guys. Everyone start buying, right? So I can be that YouTuber too. But again, like I prefer the realistic standpoints for a lot of you guys because I know you'll learn from this. So, let's see. I am new to this. Where do you see the exponential moving averages? So here, I'll do you one better. Stock Fan 2022. If you search up Pingu charts indicators on YouTube, there's like a full mentorship course. It's free, right? It's free. No one jump ahead. It's free. And there's episode 1 and 2, and it tells you how to draw charts and how to line them up. And or if you want to join the Telegram, it is also free. So here's the Telegram if you want to join. This is what I'll do, actually. I will link the Telegram for you guys. There you go. So the Telegram is basically where I post everything, my trade setups and teaching setups and everything like that. So you can join that and then learn from there too. But if you want video content, then again, Pingu Charts Indicators, and it's like episode 1 or 2, and I explain how to set your chart up. I had another question here. Was it? I'm aping into SHIB. We're really aiming for 11. You can ape into SHIB. Like I said, the first buy was at 23. So this was the first buying opportunity at 23. I mentioned to you guys that today is going to be Fed news, but this level should act as a strong support. It was acting as a strong resistance, should act as a strong support. But like there's two things that, so first off on SHIB, I see a W formation right now. W formation is usually bullish. And if we look at the daily time frame, we have to wait for this to break first, though. The exponential moving average, same idea, right? Just like Ethereum. EMAs break, then yes, free for all, take a long, be happy. But if EMAs reject, that's another retest on support. The more retest opportunities on that level, the more likely it is to collapse. If it goes to 11, that's pretty deep down there. That will take Bitcoin to probably like 50,000. So you're better off in terms of wicks. Like I said, I have the line drawn up from that video yesterday or 2 days ago. It'd probably be 18 or 19 would be a better buy zone if you missed out on 23. The first buy zone was on 23, so you can start looking at dollar cost average here. Second buy zone would be somewhere down here. Like that would be the play for me, at least for SHIB, right? So SHIB, like we played it perfectly from 1,000. So we had it on spot. We were perfect. So I'm not really panicking about SHIB too much. I don't care too much for SHIB because we already played it so perfect. But buying opportunities right now, yeah, you're buying on support. But if support breaks, just understand it's going to be a nasty drop. So that's a risk you're playing with. That's why I like the wicks a little bit better because it gives me a better understanding. And instead of looking at one chart, so like for example, like people look at SHIB only, they're like, okay, what's SHIB doing today? A better teaching would be look at Ethereum and see what Ethereum is doing today. Because if Ethereum looks bearish, then your altcoin looks bearish too, right? If Ethereum looks bullish, oh, you're chilling. Everyone's banking then. All right. Is BTC striving for another all-time high? If so, where's the price prediction? So BTC, like I explained this already, we're waiting for the daily time frame right now to play out. Once the daily time frame plays out, then we can decide whether or not we are looking for a new all-time high. If this is the start to the next leg, or of course this is just going to be another fake out and then we drop again. So everything depends on these exponential moving averages on the daily time frame. We're just going to chill for now and see how this level plays out, and then we can decide from there. So that answers Bitcoin. Price prediction, I don't have one. I'm not that guy. So you know, okay, cool. All right, so I think that's it. I think that's a good session, right? I wanna end it early, 45 minutes, only because it was a good content in terms of educational standpoint, and I want you guys to fall back onto this when you guys are, you know, troubling or whatever. So I think that's the best thing we can do. So I will end it here. If you guys have more questions, you can shoot me a DM. And then we can kind of go from there. But I appreciate you guys coming in. Thank you. I know that this was, again, the largest live session I think I've ever done, which is cool. Like 81 people. What is it? The highest point? It doesn't tell me, eh? It doesn't tell me. It'll tell me after. But yeah, I think that, yeah. So like, what is this? 81. Yeah, look at that. 81 people joined at the peak and they stayed. Like, it's not like, you know, people left like, oh, a quick in and out. So it's kind of cool. But yeah, no, I appreciate you guys, and thank you again for liking my videos. Like, this is what I mean, like a perfect example of why I ask you guys to like my video. I don't sell you guys anything. I don't have a course to sell. I don't make money from you guys. I don't do any of that. All I ask is you liking the video just grows the community more, and it's more fun, right? Like, I remember when there was like 3 of us, and now there's consistently like 50 of us on stream. So when you have more people to talk to, it's better, right? It's just more fun for everyone. So it works out like that. But yeah. I'll upload Doge, I promise. I'll upload Doge right now, actually, before I go out, because once I go out, I'm not going to come back for a little bit, and then people are going to be like, where's Doge, Pingu? Where's Doge? And I'm like, shit. So I'll do Doge for you guys. And yeah, I appreciate you guys. Thank you. Yeah, Philip, for real. Philip and XC, I think. XC for sure. XC, I don't know if XC is in the call. Like, I remember my day ones. XC was a day one. He was literally first stream. It was me, him, and some other dude. And we would just sit there all day. Like, you guys, I'm not even kidding. You guys can go to my YouTube live sessions and go check the first ever live session we did. And you can see how much has changed. Like, there was like 3 of us. And it's crazy to see. But yeah. All right, let me make the video. I'm done talking. I talked too much. Okay, ciao. Thank you guys for coming again. I appreciate you guys so much. Bye.